The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. So we'll start out the show like we usually do with our DAX index from Germany. As you can see, there are two targets set up here. The gold one is if it were a bearish jobs report, that would have sent the market down. And since it was a bullish jobs report, you can see that we're completing this. In fact, we just completed it, the ABCD pattern to the upside here on the 30-minute DAX chart. So that's what we're watching there today. And you can see what a world economy, global economy we're in, because the report here in the United States makes their market move, and the report over there makes our market move. The percent, changes quite a bit. Now, one of the charts that we featured here this week was the chart of Amazon, and we want to take a look at that because we completed a really big ABCD pattern at almost a double top in the Amazon up at that 840 level. And as you can see, the market is now trading around the 80. I don't know where it was. When I first posted this, it was around 801. That was about an hour before the jobs report. I'm sure it's probably rallied, some from there with the rest of the market rallying. But that about the only way you can play a trade like this, folks, is either to just flat out gamble and put a stop in, which in some of these markets can be disastrous because of the gaps, or you look at a put or a sell a call option for something like that. That way you reduce your risk. You also reduce your profitability somewhat, but it's better to play safe than it is to always swing for the fences. That's the main thing that I wanted to mention about. Now, I'd also like to give a hats off to one of our folks here in the Tiger Den. Yesterday, we were talking about Facebook because we had talked about Apple the day before. And as you can see, he had mentioned that the Facebook had gone up to that 135 level, which was a 1.618 expansion over the past 5 days range. And that was spot on within about 26 cents of the exact high. And of course, the market broke $5 from that level. So that's a good example of how you can use some of the information that we have in the Tiger Den just to maybe scalp for day trades or, keeping an eye on, some of the stocks that you're watching. They have some really good information on some of these things. So that's the main thing. Okay, now let's just quickly look at what I was getting ready to watch this morning. One of the main things, of course, is the gold market, and I posted the chart. And where did I put the chart, Larry? Hello. Oh dear, where is it? Dear. Well, I can't find it. Son of a gun. Oh, I was waiting for the next topic too. Well, let's just wait. I think I got it right here. Hold on just a second. Nope, that's not it. Let's not worry about the gold. I still think gold is in a pretty good uptrend. We might have some more to the downtrend. The drop today is what I was going to show you in the chart, was the fact that we had a $17 drop. It actually, the high was at 2026. Our low today was at 2008. That is $18. That's spot on to 17, and it's certainly rallied $11 from that spot very, very quickly. So there's an example of when you're watching some of these things to pay really close attention to what you're looking at as you're getting ready to buy some of these things. We've got to cover the dollar index and the euro and some other things, but there's a really important topic that I'm going to cover after we get into this area here of the hold on, my limit minders are going off already, and that's about this bond market, where we are and where we've been. Got some really great information from our friend Mr. Jim Flanagan from GAN Educators. So we want to watch that very, very closely also as we begin to see some of these things unfold here. We're having a really big reaction in fact is we just made a 61% retracement in the gold. That's $13 off the top, so that should be a pretty good top area in the gold market here at the 1219. Watch this very closely because that's just a 61% retracement back of this whole move that we've had. You came down 18, up 11, so that's pretty much where we should stop here in the gold market right now at this 1219. Now that's just looking at the Fib numbers, and they bounce pretty good off of these. So keep an eye on it because these are the things that make you excited when you do see them. And at my age, it doesn't take a whole lot to make you excited. So watch it very, very closely here at this level. It will be exciting to watch. We've only got a couple minutes. Let's just start out with the euro here because we've had such a nice move here, and we're actually bouncing back a little bit. The jury's still out on whether this dollar is going to make a big move or not. But as you can see here, you'll notice that we are at the yesterday we got right up to that 108 level that we talked about so much. We didn't quite take out the highs of December the 5th. We missed it by about 10 pips. And then, of course, we backed all the way off to the 107.10 level. And now we're back to the 107.80 level. We've already moved back 70 pips. All this is the emotionalism coming off of the jobs report. And, we've seen this so many times, how the jobs report, affects everyone. So just keep an eye that these numbers work in the face of all of this other stuff. They don't work all the time. That's the key level, is they don't work all the time, but they do work some of the time, and that's the key thing, to be watching as we go through some of the things that we're looking at here. Okay, now I wanted to update something on the sugar market here. One of our friends here at TFNN is asking about the sugar, so I'm going to bring it up. Don't trade it very often. That's the understatement of the year. But as you can see, we went up on the May sugar back on January the 17th. We made a perfect 61% retracement. We've been in a really tight trading range now for it's been, from the 17th. It's been 3 weeks now. There should be really strong support down about 70 cents in sugar, down around this 1980 level. That would be an ABCD at 38% retracement, much like we just had in the gold market recently. And if you're interested in sugar, that's where you ought to take your trading pencil off and put the order in, and then not risk more than about 60 cents in sugar, which is the equivalent to about $700 on number 11 world sugar. But I'm not a sugar trader, but I'm just giving you the chart as per your request. Also, we've had a request from another commodity that looks really interesting. Also another one that we don't trade very often, but it trades quite well, and that is the cotton market. And if you'll take a look at this cotton market, you'll see over the past 9 months, it's had some beautiful ABCD swings. And remember, cotton is $500 a pound. So that is a big difference in that cents per pound. So we're up there to near a double top, and that should be a selling opportunity in cotton. Take a break. When we get back, we're going to take a really good explanation of bond. Don't miss this one.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted the chart from my good friend Jim Flanagan of GAN Educators in Santa Monica, California. Jim is the premier GAN aficionado that I know. He and Twentyman, really have studied it as much. I mean, there's a lot of guys have done a lot of work, but I know these guys really well. What I want to talk to you about, this is a video that he produced this past couple of days. It shows the bond market from 1941 all the way through 1983. That was, if you'll figure that out, folks, that was a 42-year market where the yields on bonds kept going higher and higher and higher. In other words, as bond prices go lower, the yields go higher. And during that time, during 1981, 82, we saw Treasury bonds yielding better than 15%. You could buy tax-free AAA munis in California for 17%, and that was like a 34% rate because of the income tax bracket you were in. The problem is those bonds were called. They were called away because they were callable bonds. They were called away in a matter of a couple of years once interest rates started to drop, and of course they dropped, from 1981. The actual bottom in the actual bond market, I believe, was in the stock market bottomed on August 9th, 1980. The bonds had bottomed before, and of course they topped last year in 2015 when the bonds hit that magical 170 level. Now, what he's looking at now, Jim is believing that we have started a move very similar to this, only to the downside. In other words, bonds are going to be one of the worst investments, for the next few decades. But this is what he's looking at. He thinks that our yields are going to get back into the 5, 6, or 7, maybe even 8% level. But that there's some problems that he talks about that are fundamental that I don't understand. But I think it's interesting here that if you look at the chart, it has the same characteristics that we look at. You can see all the swings going up are, very, very symmetrical. You see a lot of A, B, C, D moves. But history about this is the fact that we bottomed in 81. We topped in 2015, and if you figure that out, you were down for 42 years, up for 37 years. So this is a pretty big swing that he's looking at. Now, he's a very, very good technician, of course, and again, aficionado, but like all of us, he has a tendency to be wrong once in a while. So just realize that that this is a possibility that he could be wrong. Now, you see a lot of things in the news about a potential of the short squeeze in the Treasury bonds and Treasury notes. Folks, it's pretty hard to get a squeeze on something like that because there's so much of it out there that it's really difficult for anyone to control the market. Anybody that could do it, of course, is our people on Pennsylvania Avenue. They're at the Federal Reserve. They could certainly be able to do that, but that's neither here nor there whether that's going to happen or not. But watch these bonds very, very closely. Last week, you remember we hit the 154 level. That was a perfect 61% retracement of the move down. And then we backed off to the 78% retracement. We've had a little bit of a rally back up again to that 78% retracement again today. So that's going to be critical, because if we get above the 154 level in bonds, that would tell us that we're most probably going to see another 3 points higher, i.e. rates going lower. And whether that is going to happen or not, they didn't do it this time in March, or February, so maybe they will possibly, raise the rates in March if they're going to do that. So we'll see that. All right, we'll take a quick look here now at the S&P 500. This is one of the things that you folks like to trade all the time. Folks, the actual one to trade is you'll notice the S&P here has a beautiful ABCD pattern here at the 2286.5, 2287 level. We're trading right now right about the 61% retracement, as you can see over the past week or so when we topped on the 229 level. By the way, Norm Winsky gave us some really great information yesterday. Well, he gave it to me anyway. Anyway, from the high that he called on May the 15th last year when we had a new moon and Mercury was going retrograde, to what we had on January the 27th with our new moon was exactly 618 trading days from high to high. Now, that it did turn the market, and we did gap down from there. Unfortunately, that doesn't mean that it's going to go down, but those numbers are very, very interesting. In fact, that we're coming into a retracement level like this today, makes one wonder that whether this is going to be a really exciting one or not. Right now, we're very, very close to that 2287 level, trading here at 2286.5 as our high. So that's a very interesting one to be watching. Now, gold did stop at that 1220 level. That was a perfect 61% retracement. We backed off from that level just a few dollars. Now, if we get above the 1223 level, then most probably we've got another leg coming up in the gold. But we did come down $17. This is what we've tried to tell you about, are these harmonic numbers that we see, that they don't work all the time, but when you add them with some other things, what it does is it tries to put you in an environment where you have a good place to put your stop, either a buy stop or a sell stop, so that you can protect yourself, because it's all about not how much money you make, it's how much money you don't lose, folks. That's the real key to being successful in this business. It's just really amazing. What'll happen is if you follow that parameter, you'll be far, far better than if you just try to hit a home run every time. Remember, Pete Rose was the first player in modern era to make $250,000 hitting singles. He wasn't a home run hitter. And of course, he's not in the Hall of Fame either, which is an absolute travesty in my opinion. but we won't get into that. Okay, let's go on to another one. We've had another request for a chart that we've been talking about over the past few days. And I wanted to mention to this this point here that we also mentioned here is this is something that I wanted to make a correction on that Norm was kind enough to remind me. If you'll look at this high that we made in 2007 on October the 7th, this was a weekly chart, folks. I meant to put that it was the week of October 7th because the actual new moon came in on the exact high day, which was October the 11th. And from then, we went from 157 all the way down to the 6 level in the S&P in our bottom in 2009 on March the 5th when we had the too big to fail program at the bank, but that's neither here nor there. So those are just numbers. That's all we're watching today. Just giving you an idea of some of the things that could be very, very important. I'm going to refresh. Well, I've got a break coming up here. We get back. We're going to do a couple other quick things here, but I want to share you something about just our environment where we're in now. I think you'll enjoy this. I hope you do anyway. And we'll take a look at it, and you'll have a good evening. And we're going to take a break here in just a second, I guess. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. NASDAQ, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, NASDAQ allows you to trade directly through them with direct market access when using their trading platform. NASDAQ never charges a fee to use their platform, which even includes real-time charts and full customization capability. NASDAQ's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. NASDAQ's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the NASDAQ banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we just hit the ABCD pattern in the S&P at 2287. I wanted to talk just a little bit about sugar again. It was actually my best friend here in Tucson. Nick has 12 brothers and sisters. His mother is still alive. He's from Cleveland. He just lost a sister about 4 or 5 months ago. There's still 12 of the kids still alive. It's a big Italian family, poorer than a church mouse, but they all did really well. And the mother is 94 after having 30. Yeah, you think he might have been a Catholic, Duffy? Yeah, he certainly was. He was that either, or he could have been Mormon also. Anyway, just to have that many kids. My grandmother had 9 children. 8 of the 9, she lost one as in childbirth, but she had 8 kids that turned out pretty good. Anyway, we have a small family. It's just my sister and I. Let's move on to what really counts. We made the ABCD pattern, the S&P here at 2287. We want to watch it very closely up in this area here, because if we get back to that 2290 level, what's going to happen is that the island reversal that we're looking at started on Monday will be sunk. It will be like the Titanic going back to 1911 as the big ship goes down in the North Atlantic. So will the double or that island reversal pattern, and that means that we could be looking at something even more spectacular to the upside. But that has to happen first, and it will take a little bit of time to do it. Let's just continue on with the sugar. I was asked to discuss this because when you trade commodities, you're trading different options. The lead option, of course, in sugar is the March option. As you can see here, it could not make a 61% retracement when the May option did. As you can see here in the lead option of March sugar, you have a perfect head and shoulders pattern. The shoulders are equal. The head is slightly higher. The time sequence of the shoulder to high to shoulder to high, and high to shoulder are perfectly symmetrical, and that means that this market has great resistance at that 2120 level. However, if it does get above that 2150, then it's off to the races, and sugar could have, one heck of a big move. That's one thing that's really interesting. Yes, it's important to watch the NASDAQ at the 5150. That is a beautiful pattern here. I'm going to bring it up to you so you can take a look at it. I got ready for you today, believe it or not. And if you'll look at this NASDAQ here, I don't know where it's trading right now, but around that 5150 level, you have a 135 pattern. But if you get above 5156, you don't have that pattern. So that's the range that you have with this, is you've got to be really careful, because if it gets there, I don't know where it's trading. Can someone, let me know where the NASDAQ is now, because I can't get to the other computer while I'm doing the show. So it's probably around 5149 or something like that would be my guess. Hey, what a lucky guess, 5149.5. Shut the front door and raise the rent. I got something right. Okay, let's put something on. This is the one from the St. John Bosco Widows and Orphans Fund, folks. We're going to take a look here at soybean meal. This is the product of soybeans, where they crush soybeans into meal and oil. The soybean has 80% meal. If we get that oil down, the meal down to this 329 level, you've got to take a look at it from the long side, folks. That's a 61% retracement of the low in January, and it is a sequence of old highs, as you can see from back on the 24th of October, the 24th of November, and again, possibly coming in here in the next week or so. We want to watch this very, very closely in soybean meal. You'll notice it's been coming down really nicely for 3 weeks, almost exactly what we did in October and November. So we're seeing some harmony in this soybean meal coming in at this same time. So this is a really, really important one to put on your watch thing. That's the thing that you're looking at. So see what's happening. Oh, if you were doing that trade at 287 and 1/2 in the E-mini S&P, the most I would risk would be 250 American dollars. That's 5 points, and that's all you have to risk. A profit on that would be at least 2 to 1. It should make at least 10 points if it is correct. But again, it's a big if as you look at some of these things. All right, I wanted to go to one other thing to warn not to warn everybody, to give you things that could happen. And I'm looking at some pretty short-term things here when I'm watching dailies and weeklies. If we go back to the stock market, back when Hector was a pup, back in the time right after the Civil War, you'll see here the top in 1929. The market was down for 3 years into the Great Depression. That continued on into the early 40s when it was bailed out by the World War II. And then you can see the consolidation ranges. The difference is the consolidation range that you see currently in that red box on the right is not the same as the ones you see in the other ones, because the other ones, this one had a higher high and a lower bottom all the way and has broken out. That makes that a 1, 2, 3, 4, 5 expanding triangle pattern that we've looked at so doggone many times, and that's why I think it is so very important. If we look at this from the Dow Jones perspective, looking at the E-mini contract when it was making its high, and we're still well over 150 points on the downside here, we did complete that, and that's going back to last February. So even if this is really bullish long term, we should get a correction. And this is, remember, we had Bill Meridian on. And, I just had a great idea, boys and girls. We could, if this doesn't work, all we have to do is tell Mr. Meridian that it was his fault. Hey, we could also blame it on Mr. Winsky because he said the high was going to be on January 27th. However, we don't do those things. We're going to take responsibility for our own things. And if you're wrong, you're wrong. And if you're right, you're right. You pays your money, you take your choice, and you just move on to the next one. There's always another one. No, Bush is not there anymore. Mr. Bush has retired, so we can't blame Obama either, and we certainly can't blame Trump because he hasn't been in long enough. So who knows? It's just, you got to take responsibility for your own trades. I'm sitting here joking around with you a little bit, but I really shouldn't because it's very serious to do the mental part of this business, and you should never, ever joke. This is something from Mark Douglas and also from Tony Robbins. Don't ever joke in a negative vein, folks. And the reason why is that your subconscious mind does not have a sense of humor. Whatever you tell it, it believes. So if you're saying, gee, I bet I'm going to get stopped out on the high tick, hoping that you won't, your subconscious mind doesn't see that. So just remember to put your stops in there. You're going to get filled on the high tick anyway, so don't worry about it. And we'll see what's going to go on with the other things that you're looking at. But don't mess around with that subconscious mind. And remember that the part of trading that is the most important, of course, is the mental part. And you've got to really focus on that a little bit each day. That's why I wrote that book, Trading Essentials. It's not what you think, it's how you think. And that's what you really have to do as you're doing some of this stuff. So let's remember that as we go through the rest of the show today. We'll take a little break, and we'll be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we were going to be talking here a little about the U.S. dollar index, because just about everything that we do here relates to, what this dollar index is talking about, because this is real money. When we look at this, we start with the euro, which we've already done today. That's the relationship between the dollar index and the euro. As you know, the euro is 48% of the dollar index itself. And of course, with the Chinese renminbi, it used to be 53%. And with China coming in, and China will take more and more of that percentage as it gets more and more active if we still have a trade balance. But let's take a look at this dollar index. It's very important. If you'll notice the low that we made yesterday in the dollar index at this 99.10 level that we highlighted to you, that was the high that we made in October. And then we came down into election night where we made a 61% retracement, and then the dollar shot up from 95 to 104 with the basically not stopping. We came back to that point one more time. Folks, this is extremely important here because we could be looking at a major high here in the euro at this 108 and change level. We were watching 108 with a great deal of interest. It got to 108.25. That's only $250 of a $100,000 contract. So that is an important thing to remember. Now, if the U.S. dollar index is now trading in this 100.4 level, as I recall, but if we get below 99 again, then that would tell us that the euro is most probably getting ready to have some more rally. This rally in the euro, I said all along, I believe is nothing more than a rally in a bear market. The long-term patterns on the euro that we've shown many times here in TFNN, and I've tried to focus in my newsletter at least every other week, the long-term picture of the euro, and it certainly looks like it wants to go to par 100 or possibly even lower. Remember that back in 2003, I believe, the euro got to 85. It came out at around 112 back in the 90s, went down to 85, up to 160, all the way back to 85 again. So this puppy jumps around quite a bit. Now there's some talk in circles that the euro's not going to be around a few years from now, but don't bet on that. I mean, this is a trading vehicle. It's nothing more Nothing more than that. Oh, I saw an interesting thing in the news yesterday where the price of pork bellies, the underbelly of the hog, that used to be traded at the CME, had a move of 20% this past month of January. It reminds me of when I was on the floor back in 1983. They had a contest of who could trade pork bellies the best, and the first prize was $1,000, and you had to put up 2,000, and I won it. 1 year, and the other year I finished third, but we gave the money to charity. But pork bellies were so much fun to trade because they follow everything follows the numbers. But I didn't know what I knew now back in 1983. I only knew a couple of numbers. I only knew 618 and 1.618. I didn't understand 786 and 1.27 and all the numbers of sacred geometry until I met my good friend Bryce Gilmore out of Australia, who explained to me how the market really worked. But during that time, during 1983, bellies would back off 61% retracement and rally to the 1.618 retracement. You could sell them, buy them back at the 61% retracement. It was a 3-month contest, and it did it over and over and over and over again. And but that's neither here nor there. It's just a little bit of history. One other question someone's asked me is, who was the most famous person that I've met in all the years that I've been doing this? It would have to be the king of pop. I met Michael Jackson in 1979. He was living in Westlake Village. We were going to church at St. Jude's. We drove around the lake to get there, and as we were driving, a black limousine was following a red Ferrari, and I knew the car, and because it had Baroni wheels, which are gold wheels, solid gold wheels, and the wheels at that time were worth well over $50,000 a piece, I believe. So I pulled into the shopping center there where the people would go and feed the ducks there at the marina, and we hopped out of the car, the ex and I, and she immediately yelled out, Emerson Red Raiders. And of course, he was from, Michael Jackson was from Gary, Indiana. They went to the same high school together. She was quite a bit older than he was, but they went to the same high school together. And he had a big smile on his face. And the two bodyguards that were there came jumping out of the car, and he immediately waved them off and came over and talked to us a little bit. And they were talking about high school while I was looking at the car. And but it was one of those really rare Ferraris that he drove once in a while. But we got to meet him. We went home to tell our two daughters, who were 12 and 13, and they went absolutely nuts. We drove back to see if he was still there, but he wasn't. But he was probably the most famous of all the people. I run into a bunch of them, and there's only been a few that are real putzes. One of them just passed away, and that was Robert Vaughn, a great actor, but boy, he was really a very, very angry person. He was the one who played the man from U.N.C.L.E., and he was also in The Magnificent Seven, but and a bunch of other things. But his partner, Ilya Kuryakin, which is David McCallum, is on the NCIS series for the last decade, and he's 80 years old, still going strong. He's a really, really nice guy. He happened to be a client of one of the Drexel brokers, and we'd see him occasionally, in the office going in and out. But that's neither here nor there. All right, one other question someone asked is about the crude oil, folks. We are trying to get to this level. Just give me a second to get here, and we'll talk about the crude. Oh, there you go. No. Folks, I had a bunch of movie stars when I was and sports figures when I was at Drexel, but they were through the Lewis Bernstein agency, with the exception of Ty Andrews and a few others, Peter Murphy, and let me see, Peter Murphy, Juliet Price, John Davidson. I had those as single clients, but most of the movie stars were handled through Lewis Bernstein, which was a big customer for Drexel Burnham, and I handled their commodity accounts. And basically, all I did was buy gold and silver, and I luckily got I was like a blind hog in a walnut factory. I just couldn't help but make money, during that time. But as you can see here in the crude oil, we are really trying to break out to the upside. The $64 question is, are we going to? Our good friend Bill Meridian thinks we are. We're going to get up to about $64, but until we get above that $55 a barrel level in crude oil, folks, I don't think we're going to go much higher. That's what it looks like to me. That is true. I met Bill Hewitt too of Hewlett Packard. He bought a vineyard up in the San Luis Obispo area after he retired, and I happened to meet him once. He's a really nice guy. I never met Packard, but I did of Hewlett Packard. I did meet Bill Hewitt. Anyway, if you'll keep in mind on this crude oil, you've got to get above the $55, and you get below 52, then you're looking at 48. And there's the $64 question of whether that's going to happen or not. We'll have to give it a shot. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got I think a little weekend here pretty soon. I want to bring out what I think is the most important thing this past week, and let's just take a look at it here today, and we will look at it. Here is the S&P on a daily basis. You'll notice that we've had equal moves into the Brexit vote, into the USA election. Perfect. We have a ABCD pattern completing. We also had a gap down island reversal, and that's also completing. And as long as that island is there, I think you have to stay off the island, because I think we've got a potential for lower prices. We had our good friend Bill Meridian on this week, thinking the market had a very negative November in its forecast. And also we had Norm Winsky on, and he also was saying the same thing. Hoping to have Rich Anderson on next week, if possible. He's been rather busy, as you can imagine, given all the stuff that's happening in the world. So we'll have him on just as soon as he has some time. But this is what I think is the most important chart of the week. We see the same thing, of course, in the Dow Jones, but you don't see the gap down, because the Dow trades, interactively. You see the gap. You don't see a gap in the Dow Jones Industrial Average, because it went to 20,100 and it didn't leave that same gap. So that's the main thing to keep in mind. This is a very, very big pattern. The fact that it didn't go straight down from here shouldn't surprise anybody, because there's so much bullish enthusiasm out there that we've seen, from the VIX index. It keeps making all-time lows, which makes it mean it's going to be relatively worthless here one of these days, probably in the near future. But history says that these things have turned, over the past 16, 17 years. We've seen some monster rallies in this, and we're trading at a level that we haven't seen in the last 17, 18 years. So it'll take something really big to happen, something either geophysical, geopolitical, something, maybe more colleges are going to come out and riot. Live every day in an attitude of gratitude. May God bless, and have a wonderful weekend.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.